Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from YouTube. We got a very exciting day today. So many things are happening right now as we speak. We're making some really big moves in the gold market, but today we're going to be reviewing Powell's testimony against Congress. We're going to be looking at interest rates, the U.S. dollar, and we're going to be focusing on gold and silver and taking a look at lumber as well as virtual currencies. It looks like we got a market in the making. Stay tuned. We'll be right back. Welcome back, everybody. This is Patrick MontesDeOca once again here. We have a real fast market condition this morning. And let's come back here for a minute and take a look at gold trading last at 1794.20. Up about $17. Silver trading last at 26.25. Up about 38.39 cents. We have a real fast market conditions here as we speak. So let me focus here on what the market is doing here as it begins to open for today's session. Yeah, we pretty much have a big reversal going on across the board, it seems, in precious metals. The derivatives in metals are very, very strong. Palladium up 56. So what appears to be happening here is that the move that we saw on the basis of the Feds making comments about interest rates was completely overdone. The markets came down beyond the extreme level of the means, and now we're beginning to see an adjustment taking place. And that seems to be pretty much happening across the board. One of the things that I wanted to share with you was basically this report that came out on investing.com relating U.S. futures edge higher. Fed speakers continue to attract attention. This was a report based on an interview that was done on Tuesday with Chairman Powell. And pretty much it states, contrary to what the comments that he was making about interest rates, and actually very clear, to quote him, he states to the members of Congress that we will not raise interest rates preemptively because we fear the possible onset of inflation. We will wait for evidence of actual inflation or other imbalances, Powell said on Tuesday in his testimony before U.S. lawmakers on Capitol Hill. Wall Street had struggled last week with the Dow suffering its worst week since late October, and the S&P since last February. After the FOMC, members brought forward the likelihood of interest rates hikes to 2023, a year earlier than previously guided. I think it's very, very difficult to make those kinds of comments 2-3 years down the road when things are so volatile and very difficult to forecast and expect that the economy is going to adjust on a 2 or 3 year basis. The obvious intention, I think, that initially was implemented by the Feds, by these comments that were made, was to talk the market out of inflation, to scare the market, out of thinking that inflation is out of control. And the market got overheated, in all fairness, as well, because that inflationary pressure, that inflationary stress did not show up on the 10-year note. And we began to see basically the prices of lumber collapse, the 10-year note. Let's take a look and see. $147.70. It's under 150. There's no panic about inflation fears. The inflation fears are built in by the media, by the internet, by all of these pundits and gurus out there that are pretty much hypothecating the fundamentals in the market, you might say, that are completely skewed anyway to begin with. So what we're looking at is the reaction of the market now, realizing that it was overdone last week. And they hit the market pretty hard this week. And you know what? I welcome whenever that happens, because it gives me an opportunity once again to build in and add to my long-term positions, which I'm focusing on in gold and silver. We got back into a Bitcoin as well. Recommended to get back into GBTC, which is the Bitcoin Grayscale Investment Trust. To my subscribers, I recommend to take the path of least resistance without getting too complicated and also taking additional risk in using some of this basically virtual applications. These virtual domains that are trading in virtual currencies, which I believe are, pretty on the high risk of things because they're not regulated. And so to reach my level of comfort and to be able to share this with my subscribers here in my live trading room, I trade GBTC, which is the Grayscale Bitcoin Investment Trust, which is the trust that holds all the Bitcoin in the ETF. And so, that follows the market in Bitcoin very closely. And I also am getting involved with basically Coinbase, which is an application, which is a platform that allows you to trade in virtual currencies. Virtual currencies are not going away. And the fact that we're getting a lot of political resistance against virtual currencies, or what I consider to be virtual assets, is just an indication that there is a need, for that demand, basically, as we move into this incredible virtual world, virtual economy. We pretty much are limited in the use of fiat currency, you might say, in that kind of a world. And so, the natural need of people in terms of not only having the freedom to be able to transact without the necessity of a bank or a middleman, so to speak, is really an advance in technology that I don't believe has been yet fully comprehended. At least, I'm in the process still of adjusting in terms of being able to accept it as a currency. I don't see it as a currency yet. Even when you compare it, to assets like gold and silver, or even silver in particular, the actual silver itself. But the virtual world is growing by leaps and bounds, and it's finding a niche, you might say, in the application of all of these virtual assets, and not only virtual currencies, but also creating other types of assets, art, such as that are holding tremendous value in a virtual sense. And so welcome to a virtual economy, welcome to a virtual world where you don't necessarily even need to go out and physically go out to a store. You can pretty much buy anything that you like, or get anything delivered right to your door. And it's amazing. It's an amazing world that we're living in. But when it comes into the fears of inflation, again, the 10-year note doesn't seem to indicate that at all. As well as the price of lumber, which you can see here, pretty much it has almost given all of the move that was made since March of this year. Now, I want to take a look at a specific chart here that I'm using that kind of gives it a more clear picture of the reversals in the trends here. It's the Heikki Aishi chart formation. And it's a real interesting chart application that gives you a pretty clear picture of the trend reversal, so to speak, or the buyers or the sellers of the market, which is really the area that I believe is one of the most important aspects of analyzing the markets, is to be able to find that factor in terms of the supply and demand of the market, which is pretty much what we do. And you can see clearly that lumber is on the way down. And so let's take a look at gold here and see what it looks like in this type of chart. It gives you a very interesting picture of pretty much where the market, what signals the market is given here, and here the market is turning into a red bar, which is what I'm showing you here. Basically, is the gold market in comparison to GDX, which is on the left of the chart, where it is in relation to the gold market, as well as silver and the SLV. And I wanted to take a look at and compare pretty much where those markets are in relation to the actual price of the gold market. And using the moving averages, the 36, 54, 90, 200 moving averages, we have a pretty clear picture in terms of where the market is in relation to this long-term moving averages and also in relation to these other assets. And it seems that, to me, the derivatives are undervalued to the price of gold. SLV, GDX, which are the leading indicators in terms of the metals. Palladium is regaining its integrity once again after a massive correction that we saw. And you can see here, came down almost to a 78.6% Fibonacci retracement, reverting from the golden ratio as expected. This move here that was precipitated by the comments made by Chairman Powell were, I believe, again, of highly speculative nature that use the Fed's meeting as an excuse to clobber the market as they did. Because the market fundamentals really did not justify this kind of collapse that we saw. And the move was precipitated primarily in the futures markets, which is a fairly thin market where if you're a large player, so to speak, and with a lot of liquidity, you can impact the prices severely in your favor. And so it was convenient, particularly by the massive short position that was held by the central bankers. Obviously, it was an opportune time to see how far these algorithms can push the market and give them the opportunity to get out of some of the short positions. According to the Commitment of Traders report, they have amassed a huge position that they can't seem to get out of, which I believe is in the neighborhood maybe of about $25 to $28 billion, maybe. Who knows, after this liquidation that we saw. We will take a look at those numbers here as we come out, as we end this week. But it will give us a clear picture whether they had liquidated their positions or, have added their positions. There seems to be some talk about Basel III, indicating that the banks or the government basically is reducing the support for the central bankers in order to be able to margin their positions or maintain their positions as they have in the past. And so the expectations are that they have to reduce their short positions as the capital is pretty much running out in terms of the ability and the support for them to be able to sustain such what I believe to be is exaggerated or common use word is manipulation. I think the algorithms provide the levels where they identify the speculation in the market. In the algorithms' goals and objectives basically is to take out those stops, where the majority of people use it as regular stops. Now, this is a very interesting point, I think, that I want to elaborate on a bit in terms of stops, which is one of the reasons pretty much why we recommend that you do not use straight stops when you're trading here. Traders in my room are aware of that because you can get stopped out, especially in a situation like this, in no time and constantly. And the AI in the algorithm here tells you basically that you had three choices of stops. The most conservative one is a close below right away the level of entry point. And in this case, if it's recommending the buy signal at 25.85, which gave us an opportunity a few times actually to get on board here. Once you have this data in place, and we've had this data published in September of last year, September 28, and we identified this to be pretty much the buy one level on the 360-day cycle, which is a pretty significant level of support. It's the annual level of support. And in fact, this or in my trading room here, I've been recommending for my subscribers to take a look at that cycle and recommending to take advantage of that level and signal, which is a major long-term signal. I make an effort here to update my traders in the live trading room pretty much throughout the day and literally 23 hours a day whenever there's something that's going on. So I do make a point of maintaining constant updates here, particularly as we take a look at markets like this that are indicating right now the next target is 26.59. By trading above 26.24, first of all, the target was completed, as you can see here. And once the target is completed, it goes neutral. So the daily signal has gone neutral. The weekly is moving up from a bearish trend because it's trading below the average, but the annual target that we commented here just a bit ago, the signal here at 25.85, the first target is the 26.59. Second target is 27.41. And third target is 28.98, which is obviously a long ways from here. Now, these numbers are the numbers that we trade for the rest of the week, and we'll let the market do what it's going to do. When it gets to these numbers, the AI will tell us exactly the transformation of the market from a bearish trend to neutral to a bullish trend by the transition of price into these pivot points. So we seem to be obviously picking up a lot of momentum. The daily now program is neutral, and we're moving into the weekly targets as well as the annual signal activated at 25.85. Let's take a look at gold here. Gold is completing targets. The sell one level of 1789. We had a Fibonacci retracement at 1794, and 1800 to 1802 is the target. And same relationship as you can see here in the gold. On the daily, you're looking at 1800 on the sell 2 level. It seems that the silver market is running a little stronger than the gold market this morning. And here's an example of how you can use this as a GPS to manage your position, to manage your profile, to manage the direction of the market. And depending upon your profile, then you can apply this incredible intelligence, whether it's in a futures contract, a stock, an ETF, or whatever you customize your portfolio. The target, the active target, is the sell to level of 1800 in gold. So let's continue to watch and see the magic of the VCPMI happen here. Let's take a look at virtual currencies. 228.10 trading last for Coinbase, which is the platform for virtual currencies. And this instrument has obviously come down more than 50% since the IPO was initiated back in April, around the middle of April, with a high of 429.54 that was made. And we've come down to making a low of 208. And as you can see, coming down into the blue area that the AI identifies it to be as accumulation of supply. When you see the price in blue, it gives you an alert for you to begin to look at accumulating at that price level. And based upon the confirmation of the signal, it will give you a trigger point for you to activate your signal. And here we went long, basically. 217 activated a buy signal, and we're trading at 228. The first target was completed of 226, and the targets of 232 to 240 are in place. Let's take a look at GBTC. $28.99. We made a low of 24. We made a low of 24 as of yesterday. And we had a weekly buy signal at 23.75, never activated, but it reverted from that level and activated a buy signal, as you can see, from the buy one level of 27.26. And we recommended our traders in our private trading room to go long. The first target was completed. The sell one level of 32.95 to 35.13 are active. Once again, it appears that the markets were overdone last week on the basis of the comments that were made by Chairman Powell with regards to interest rates. It doesn't look like inflation is in the system, according to the 10-year note, according to Lumber, which are major indicators for identifying inflation. So continue to hold on to your long-term core position in gold and look for any corrections in the market like we had here to give you the opportunity to add to your position. We'll talk to you soon. Have a great trading day. I'll see you next time.